Welcome everyone to Daily Mortgage Rates Live with the Mortgage Calculator. We will wait just a few minutes here to get started. Let us go live on all the different platforms. We are streaming this live on YouTube, Facebook, Instagram, and LinkedIn. So give us a second here just to go live on all the different platforms. We did pull the chat up there on the screen, so feel free to drop a comment there. I see some people were already commenting. Thank you for tuning in nice and early, and we will get started here in just a minute. Hope everyone's been having a great week so far. Shout out to everybody that was dropping comments here. Jamie, Africa, Robert, Mark, everybody there in the chat. Thank you for tuning in and dropping comments in there. Again, for those just tuning in, we're just going to wait a few minutes here to make sure we can go live on all the different platforms before we actually get started. All right. Feel free to drop a comment there in the chat as you come on. We'll get started here in just a second. Thank you for commenting there. Julio, Michael. Michael says, terrific Tuesday. Man, we got a name for everything nowadays, right? Terrific Tuesday, wonderful Wednesday, all that kind of stuff. All right, looks like we are live on all the different platforms, so we can go ahead and get started. Thank you for tuning in, everybody. We'll go ahead and take the chat off the screen here so we can get into it. So welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. One of those loans are foreign national loans, and we're going to do a deep dive into that topic here today. Every morning, every weekday, what we do on this show is go through the live mortgage rates for different programs. Then we do a deep dive into a different topic every day. Our sales manager, Jose Gonzalez, with 27 years of experience as a loan officer and a realtor, is going to go into a topic that he's very familiar with, especially being down here in the South Florida market, which is foreign national loans. So we will get into that here momentarily. But first, let's do what we do every day, which is pull up our pricing tool and see what the actual rates are today for some different programs. So Nick, let's go ahead and pull up that pricing tool and see what the market is looking like this morning.
All right, let me switch my screen and we will check it out. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR, including all the costs for today. It is June 6th, just after 11 a.m. Eastern. So most of our standard programs are live here on the Pricer. If you'd like a full loan estimate with a breakdown, itemized breakdown of all the costs that go into the APR, please get with one of our team members. We have over 300 licensed loan officers. And we can do primary second homes in 24 states. And we can do our DSCR commercial business purpose loans in 44 states, so pretty much the whole US. Now, for our demos today, we will use our Pricer and set up the same scenario so we can compare across the programs and compare the APRs. We'll set up a loan amount of $400,000. We'll set the LTV to 80%. That means 80% loan, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost, which is what most customers are asking. We will compare our conforming conventional rates. Then we'll check out the FHA rates. And then we'll go into expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs where we can use alternative income. We don't do VA live. That's only for our active service members and eligible veterans. If you do happen to be eligible for a VA program, please let us know. We'd be happy to quote it, but not everybody is. And same with USDA. That's only for properties in a USDA eligible area. So if you do happen to be shopping there, let us know. We can quote those very quickly. But we don't do that live. So let's start with conforming conventional. We will set up a purchase, 30-year fixed loan, pretty standard, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade. And our estimated FICO for all our demos will set to 760. And our estimated debt to income ratio for all our demos will set to 40. So with these basic settings, let's check out the rates this morning. Just about the same as it was yesterday. A little bit lower, I believe. So 6.875 for one discount point in cost. And that final APR of just a hair above 7 at 7.042. So the conventional rate's right around 7.0 at the moment, which is about what they were yesterday and last week. Now, if our customer wants to compare FHA or for some reason doesn't qualify for conventional, usually the next best option is FHA. So we will compare quickly across the programs by setting FHA. Everything else will stay exactly the same. FHA does allow a little more leniency on credit as well as a higher DTI ratio. So FHA is usually the next option that most borrowers would like to compare. So let's compare to conventional. All right, best option today the computer found is 6.125 rate for one discount point in cost and a final APR of 6.717. So in this case, FHA is actually a little bit cheaper for our borrowers, with the conventional just being over just a touch over 7. Right here, the FHA is at 6.717, even with the upfront mortgage insurance and yearly mortgage insurance that is required for FHA. So definitely recommend our borrowers out there shopping for conventional. Check out FHA as well. With some recent changes, it actually might be a little bit cheaper, like it is in this scenario. So, some good options for FHA and just a touch cheaper. Now, if our borrower for some reason doesn't qualify for FHA or conventional, many other banks or lenders don't have other options, but that's where we love to shine here with our expanded guidelines, aka non-QM, where we have over 5,000 other loan programs besides conventional and FHA. So everything else will stay exactly the same as all the other demos, but notice we have a new option that pops up for non-QM, and that is our income option. So full doc is what we use for FHA, and conventional, that's 2 years of tax returns, what most people are used to. So typically we choose a non-QM option to select one of these alternatives, such as asset related, business bank statement, our investor DSCR we'll go over in a minute, personal bank statements, stated income, VOEs, 1099s, P&Ls, no income at all kinds of different options that we have. For our demo today, our most popular option by far for a primary home borrower is going to be a 12-month personal bank statement program. And that's going to be for a self-employed borrower. Many times our self-employed borrowers, when they submit 2 years of tax returns, have various write-offs and things going on, which make it hard to qualify at all, or they don't qualify for as much income as they wish. So in this case, instead of using 2 years of tax returns, for income verification, we're simply going to use their last 12 bank statements, and we're going to determine a debt to income ratio, in this example, of 40% using their actual cash in the bank statements rather than their tax returns. So most self-employed borrowers qualify for 2, 3, 4 times as much income when we're using their actual cash in the bank statements compared to their tax return income. So most of our borrowers who may not qualify otherwise will qualify for where they wouldn't qualify or qualify for much more loan amount and get that home that they really want. So a great solution here for our borrowers that might be on the edge or maybe need a little help qualifying. These non-QM options are amazing. The rates will be a little bit higher, but let's check it out because they are great solutions for our borrowers. So right here, the best option that popped up, 7.375 rate for a bank statement program at 0.75 discount points and cost. And that's a final APR of 7.433. So very comparable. Remember, conventional was 7.0 something, 7.04, I believe it was. Right here, we're at 7.4, just a touch higher. And we have a great solution where we can use 12 bank statements rather than tax returns. And these non-QM programs have other loopholes as well. So some of these may be just standard programs. But if we scroll down here, you'll see we have dozens and dozens of versions. Some of these at the higher rates may allow things like credit events such as a foreclosure or bankruptcy and other things like that. So please get with our team. They'll find which one of these programs will fit best for you. And for our final demos, before we have Jose go into our deep dive topic for today, we always want to do a live demo on investment properties. So we love to work with investors here, whether you're a first-time investor or a seasoned investor, we have some great options. So for an investment property, let's set up a couple demos here with the same LTV, 80% loan to value, 20% down payment. Set the desired price the same. And we'll compare our conforming conventional investment property rates with the expanded guidelines, aka non-QM. and we'll simply compare those two options. And that's because FHA, VA, and USDA are not eligible for investments. So set up conforming here first. Everything will stay the same as all our other demos. All we've edited here is the occupancy. So let's see what the conventional rates are here for an investment property. So as we say every morning, the GSEs that operate the conventional programs have added penalties essentially for investment properties. So we do not find any options for one discount point in cost. The best option the computer found, 7.375 rate for 3.625 discount points in cost, pretty hefty cost there, and a final APR of 7.629. So good options here for our borrowers that qualify for conventional. But they have added some pretty steep penalties, and unfortunately, the computer can't find an option for one discount point. So most of our investors are asking for other options where they can save this, in this demo here, $14,500 to invest in other things, and they don't mind raising the rate a little bit, although conventional doesn't really allow us to raise the rate. So that's where we love to present our non-QM solutions. So for the final live pricer, set up the same demo, 80% loan to value, set it to investment. And for the final demo, we'll check out our non-QM expanded guidelines programs. So everything else will stay exactly the same, but we do have to select our income. So the most popular program by far for an investment property is going to be our investor DSCR programs. That's our most popular loan program here at the company as well. And that's because it doesn't require any income or employment from the borrower. We are simply going to use the estimated rental income from the property we're purchasing in this demo to determine a DSCR, or a debt service coverage ratio. So if the estimated rents can cover the expenses of the property, the PITIA, that is a ratio of 1.00 or higher, aka the property cash flows on a monthly basis. The rents are higher than the expenses for the property. We also have options at a DSCR ratio under 1.00, which means the property doesn't quite cash flow on a monthly basis for one reason or another. So we have tons of options for our demo here. I will always delete this so we can see all the different options pop up. And the final thing we need to select for an investment property under non-QM is it's always standard to have a prepayment penalty. 3 years is always standard, so that's what we always select for the demo. We can select 0. That will limit our loan programs. They don't all allow 0. And when they do, it does cost more. And same thing with 5 years. Not all allow 5 years. If they do, it does cost less, but not all loan programs allow it. So we will choose 3 for the demo here. So with these basic settings, let's check out the DSCR rates this morning. Great. We got a better option than yesterday. Love to see when we have downward movement. So nothing really exciting today's episode except this, right? So we had basically everything else stayed the same, but DSCR came down this week. So best option we have here now, 7.75 for 0.85 discount points. Solve that problem for our borrower for less discount points. And a final APR of 7.812. So almost identical to conventional here. Great option. Notice this does require a high DSCR. So the great options are going to be at a little bit higher DSCR. Obviously, the property is a stronger property, but we still have options for other DSCRs. You'll see here for a DSCR of 1.2. You'll see here 1.15. You'll see some other options here for different prepayment penalties. So please get with our team. There's hundreds of options under the DSCR umbrella here that will fit for any of our borrowers. Some may allow things like short-term rental income. Some may allow things like foreclosures, bankruptcies, credit events. So tons of different options. We absolutely love the DSCR programs. And for today's deep dive, we're going to talk about a specific subset of the DSCR program. So let me change my screen and we'll go ahead and talk about today's deep dive on foreign national loans. So this is a subset of DSCR. If you scroll down that list, some of those programs will allow a foreign national. There is some pricing adjustments and LTV adjustments, obviously, to that program. We don't have an 80 LTV program, so technically you didn't see one on that list that we just saw there. We'll need to adjust the LTV to show some of those options. But we have some amazing DSCR options for foreign nationals and even some other options as well. So, Jose, if you're ready, as we do every day, why don't you first explain what a foreign national is, especially after yesterday's episode. We were talking about I-10s. Today, we're talking about foreign nationals, completely different. Let's define it, and then let's get into some live demos if you're ready.
Yes, absolutely. It's great that, and obviously on purpose, we followed up four nationals today with, from my teams yesterday because we wanted to lay down the context for what a foreign national is and what a foreign national is not. So we covered yesterday what DI-10 is, and the foreign national borrower lives permanently outside of the United States, right? And they derive their income, if income is necessary, also from outside of the United States. Now, we do have full doc options and we do have um, DSCR options for the foreign national. Now, we do have also various options of DSCR, which I wanted to make clear. Because, as we like to say at the mortgage calculator, it's not just about the rate, it's about is this loan going to be able to close under the terms and conditions that the document requirements or document ability of the borrower allows us to do. So we do have a very special DSCR option, especially tailored for our foreign national borrowers, that does not require a passport, nor does it require a valid visa if the borrower is not physically signing in the USA. It's very important to note because one of the things that's holding back a lot of these foreign national prospective foreign national borrowers is the fact that they don't have a visa, they don't have a passport, and everybody's telling them that they need it in order to close the loan. Well, they only need it for this option, one of the options that we're going to present today, if they are not, if they're physically signing in the US. If they're not physically signing in the US, they do not need it. This particular option also is very special in that it also does not require a CPA letter from the borrower's country um, to document any type of housing expense. We know that this is DSCR, so we're not documenting personal income of the borrower, but in some cases, some of the DSCR options do require a CPA letter to document their housing expense in their country where they permanently reside. And additional benefit of this program is it does not require any credit reference letters. Most of the other DSCR options do absolutely require at least one credit reference, if not two. So keep that in mind when you are looking at the rates, structuring your deals, both as a borrower and both as a loan officer. What are the obstacles you may face and how do we deal with them? Right. So I want to share my examples here so you can get as excited as I am about these foreign national loans. This is our first example the very special one that I was mentioning, the one that you should all be reaching out to all of your contacts outside of the US, all of your professional referral agents outside the US, that letting them know that you do have this option. So if their borrower is still waiting or prospect is waiting 6 or 8 months for that appointment at the consulate or embassy in their country, this is a solution. So we already mentioned all the details there. Let me show you the rate. Right. So we're looking at on our example here, 25% down, 500K purchase, 375K loan amount. And we're looking at 9.875 with a little bit of a lender credit. And they can buy it down all the way to 8.75. So this is true, absolutely no doc. And remember, never a credit score required for the foreign national borrower. We do price it with certain minimum credits to get pricing, credit score to get pricing. However, if the borrower does have a U.S. credit score, mind I say U.S. credit score, not Canadian credit or European, but U.S. credit score, then you do have to abide by the credit score and credit trade line requirements. Really important to note there because a lot of people get confused about credit requirements. Now, this DSCR option, still 75% LTV, is the one that does require the passport, regardless of where they're signing, does require a CPA letter to document the housing expense and will require two reference letters. You can document the credit in a number of different ways, but you do need two of them. So here you're looking at 9.375. So it's about a 0.5% lower in the rate, but still 75% LTV. And keep in mind, most foreign nationals pay the properties off way before the term of the loan. So at this point, sometimes ease of documentation may be more important to them. So here's a Florida only option. This option is for a 7-1 arm. It is full doc. It is 75% LTV. And it is 8.25 with a cost of 0.75 points to the borrower. So this is an interesting option for your Florida loans, but it is only applicable for Florida. Okay, and this is a full doc option. This is the full doc foreign national option that I was mentioning that does require, being full doc, it will require the CPA letter for income, and it will require the 2 reference letters, right? So this is one step above, the other one from this same option. When you go DSCR, requires a CPA letter and the same reference letters, a CPA letter for verifying housing expense only. No, don't have to mention income or employment of any type. However, if you want that 8.5% rate at a 75% LTV, now you're talking 0.875 of a percent lower in the rate. It is full doc, and in this case, the CPA letter does have to mention the income and the if they're self-employed, and if they're an employee, then they need to get the income letter from their employer, but substantially lower rates. You can buy it down all the way to 7.375, which is amazing. Now, with this same option, here just showing you the difference in the cash out. So at the cash out, the LTV is reduced by 5%, but you still have, so you're at a 70% maximum LTV, but you're still looking at 8.625 at par for a foreign national, 70% LTV, full doc. And you can buy it down all the way to 7.625%. Now, I do not have a DSCR option for your cash out, but it is a 70% LTV maximum on that, with the same option that goes to 75. So very good foreign national options. And by the way, that is our training for tonight, working with the foreign national borrowers, many intricacies to dealing with foreign nationals, from knowing how to properly stack your documents, knowing how everything has to be in English or translated in English, and then setting up the logistics for the closing, because that is, believe it or not, a lot of times the stumbling block to getting these deals consummated is that everybody's rushing to get it clear to close, but nobody's realizing that you have to set up the logistics for the closing sometimes 2 to 3 weeks in advance. So very important. Make sure to tune into tonight's training.
Perfect. Well, I don't see any questions, but just to reiterate again, Jose, what a foreign national is, this is somebody not residing in the country, not deriving their income from the country, correct?
Correct.
Meaning the country, meaning America.
Yes. They cannot be permanently residing in the U.S. We're not going to accept any income they may be deriving in the U.S. because we do have foreign nationals, for example, that have LLCs that are doing some type of business here, whether it's holding real estate or whatever they're doing through an LLC, and they are filing tax returns, but we cannot accept any of that. Because that's, they may have an I-10 for filing those tax returns, but they don't have credit. They're not meeting all the other requirements of an I-10. They're still foreign national, permanently residing outside the U.S.
So this is different from I-10, not for non-permanent resident aliens, right? This is somebody that is not residing here at all, right?
Yep, and it's a super easy loan once we properly separate the two, right? Because it's that convoluted situation where they're combining some I-10 characteristics with foreign national characteristics, and then having something that can't move forward. You're either one or the other, can't be both.
All right, great. Well, as Jose said, that'll be our topic tonight, which we do every Tuesday and Wednesday for our loan officer training that you can catch on our YouTube channel, 7 p.m. Eastern on Tuesdays and Wednesday nights. But we do this show every weekday at 11 a.m. Eastern, where we go through the live mortgage rates and then we do a deep dive into a different topic like we did today with foreign nationals. So thank you, Nick. Thank you, Jose. Thank you, everyone, for tuning in. And we hope to see you tomorrow at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone, have a great day.
Thanks, everybody.
Thank you.